What's up, everybody? Hey, guys. One sec, I'm popping up YouTube Live. I got Instagram Live going just here for the weekly office hours. Let me see what's going on with my OBS. Hey, what's up, guys? Hey, Instagram. One sec. Boom. All right, we are live. We're live on YouTube. We are live on. Oh, you guys can't hear me? Weird. Let's see here. How about now? Can you guys hear me now? Checking my mic volume. How about now? Can you guys hear me now? A little better? Let me try. Okay, great. How's everyone doing? How's everyone doing on this Your mic is low, brother. I think it's very quiet. Is it better? Okay, cool. Hopefully you guys can hear me on YouTube Live as well. It looks like it's picking up the mic, so that's good. But yeah, let's get started. And I have basically everything up. So welcome to Wall Street Oasis Office Hours. I think this is session number 8. Just again, I have these. I can do about a little under half hour today. Just wanted to open up to any questions you guys have regarding finance careers, anything at all. Good to see you as well. Anything you guys want to chat about, whether it's WSO related stuff or not. Yeah, crypto, Cardano to the moon. I don't know, is Cardano trending? That's funny. I think anyone who owns cryptocurrency is probably saying they wish they owned more. Some pretty interesting movements in the stock market lately. A little bit of air coming out of the NASDAQ, which is actually probably a healthy long run. Crypto still, even with some of the drops in the last week or so, still really impressive run. And Bitcoin's been holding 50,000+ for a good amount of time now. Saurav says, please explain venture capital a bit. Sure. So venture capital, you can think of it as very similar to private equity in the sense of, and we have a venture capital course right here. You can really think of it as, in terms of career, it's very similar to private equity in the sense that you're evaluating companies and trying to determine which are going to have outsized returns. So you can think of venture capital, private equity, and venture capital, growth equity, and then private equity as kind of a same thing as a continuum on a spectrum, where venture capital, you're investing in early stage startups up through like series A, B, C, D. Then there's growth equity investments, which are typically a little bit more mature companies that have a lot of, that are growing fast, hence the name growth equity. And then private equity tends to be associated with companies that are a little bit more mature, where they're high cash flowing businesses that can have high debt capacity, so you're able to do a little bit more financial engineering. All that means is you can put a lot of debt on the business and keep your equity check smaller to boost returns. And so when you say, what is venture capital, explain venture capital, it's really just investors pooling their funds. So it's the typical GP LP structure. So if I'm a venture capital fund, I'll go around and say, hey, I'm Patrick Curtis. I run WSO Ventures. You should give me money because I see the best social community sites in the world, and I know how to invest in them because I have this specific expertise. So then I raise, say, a fund, a $100 million fund. I'd then deploy that $100 million to acquire or a minority or majority stakes in, with venture funds, typically a lot wider swath of companies, about a lot higher number. So anywhere from 20 to 100 portfolio companies in each individual fund. And then from there, especially with VC, you'd expect a lot of them to fail. But ideally, you've invested in early stage, one of the ones that become outsized returns, like an Amazon or a Twitter or a Facebook or a LinkedIn or any of these, famous large cap tech stocks. If you're early in on one of those, that can make an entire fund because the returns are insane. So even if 90% of your investments fail and go to zero, if you pick one or two that are the right ones, you can still have a great performance in your fund. Let me just check real quick. I want to make sure that YouTube is working. Yep, okay, YouTube's working. So YouTube viewers, if you want to ask questions, I'm taking questions from Instagram here live in front of me, but I also got YouTube here. For people who are on YouTube or on Instagram, it'd be great to help out the algorithm. Just smash the like button or whatever you do. I don't even know. I'm old. I'm totally boomer. You can see with the gray hair. So like it, subscribe, whatever you want to do if you're enjoying this. Okay, good question by Chris Santa Cruz. Chris, do you see the growth or pay and equity research dwindling as more and more code eliminates a lot of the mundane tasks in equity research? Hey, thanks everybody. Thanks for the likes. Chris said, I think, Chris, that the pay and equity research already has kind of been suppressed for a while, actually. Do I see it continuing to dwindle? Yes, I think, but there's always going to be, I think, a market for good research. It's just a question of, I think where a lot of the value is going to be more on the deep dive fundamental stuff rather than just some of the stuff you see on the sell side. That's, tends to be more higher level stuff. I don't think that's adding a lot of value. I'm now 41 years old. Melvin asked, where do I work? This is my home office. I'm in Saratoga, California. I'm originally from Boston. Go Celtics. Pretty brutal season for us, but Jaylen Brown just went down, so it's kind of a depressing week. But we'll see what they can do. We'll see if they can even make it to the playoffs, given how bad things are trending. So here we go. We got a YouTube question. Hey, Patrick, thanks for hosting this. Do you think ECM, DCM is easier to break into compared to traditional IB? Hey, Kishan, good question. I don't think it's that much easier to break into traditional IB, oftentimes because there's a general pool. And, whether you get placed into equity capital markets or debt capital markets, oftentimes, I think at most banks, it's post the offer. So it's something where you are typically asked to rank groups and stuff like that, and then they'll just place you. I think if you're looking at the large bulge bracket banks that aren't the top, like a Morgan Stanley or a Goldman, if you're looking at a BAML or a Citi, it might be easier to get into those ECM, DCM groups than a traditional M&A, powerhouse, boutique, an Evercore or a Moelis or something. But that's debatable even in of itself. So I wouldn't worry too much about whether it's easier or not. I would just try your best. So let me get some coffee. Hey, what's up, Damon? Okay, how limited are your exit opportunities if you get into ECM, DCM, or restructuring compared to investment banking or perhaps Lev Fin? I would put in terms of order of exit ops. Let me talk about restructuring because I was in restructuring at Rothschild. Restructuring will set you up pretty well for private equity recruiting, but especially if you want to go work at a credit fund or if you want to do any sort of distressed investing, restructuring is a great place to be. because you learn a lot more about like the capital structure and complex debt structures and stuff like that. Chapter 11, prepackaged bankruptcies, all that stuff that's relevant to investing in the distressed space. I would say in terms of exit ops and ranking them for pure private equity buy side, I'd say M&A groups tend to be the best. Then I'd say levered fin sponsors, and then probably ECM, DCM after that, and restructuring probably right alongside that. Restructuring just kind of puts you in the running for a little bit of a different pool of funds. Doesn't mean you can't get into a straight buy side fund that's non-distressed. It just means people in lev fin and M&A are probably going to get the first looks there since they have a lot more reps with that type of work. I came from restructuring. I did end up getting a pure buy side middle market private equity role out of restructuring, so it can be done. Hopefully that's helpful. Let's see here. Sanat asks, hey, Patrick, how do you get a better understanding of the different product groups at the banks? Sanat, I think really the WSO forums are a great place to look. So that means actually going into the forums, running some searches on whatever bank you're looking to learn more about. So if you want to learn more about Goldman TMT, run searches for that. It's funny because we had people complaining about our search feature and how bad it was, and you guys are right. Like, the search was horrible. We've been putting a lot of time into it, and I think we actually broke our search, so it's down right now, where I would run the search on YouTube Live just to show you. But I think the WSO forums are one of the best places to look for that detailed group-specific information, and then the company database within there. And the company database you can go through right here. You can find there's not just company-specific information, but you'll see you can actually filter by. So if you do like company reviews, I believe you're able to screen. You can hop over to YouTube. Yes, you can search by group right here, which is nice because you can filter by reviews by specific groups. Banking is probably the most. I think we have, we're now well over 100,000 entries into the company database. So a lot of those are salary entries, but there's still a good number of company reviews to give you kind of at least a decent sense. I think if you couple this research with actually talking to people who worked at that specific group, that's probably the best way to get firsthand knowledge rather than just relying on what you read online and in like a Glassdoor or a WSO company database. I wouldn't recommend that. David asks thoughts on FLDP programs. I think FLDP programs can be great. It's very competitive to get into. This is from David on YouTube. FLDP is very much underrated, I think, in my experience, because you get a really wide breadth and a lot of these programs of how businesses work. So it sets you up really well for like corporate finance careers, and it's a leadership development program. So typically it feeds into kind of more senior leadership of the firm, of these large corporate Fortune 500 companies. So in that sense, absolutely like a great place to start. And if you don't like it, it's not like if you go to FLDP, you can never break into banking or lateral there. It's something that I think people do pull out of there. So let me see what else we got here. let me check out Instagram now. Someone asked, what do you think about WSO's North American centric view? Well, I think you'd be surprised. I think the number 2 city on our statistics is actually, let me see if I can pull this up. If you look at our analytics, I'm sharing my screen. Let me see if I can pull this up. If you look at our analytics and you go by geography, I'm pretty sure that our second largest city is London, but maybe I'm wrong. So United States, if I go by cities, Toronto's big, London's big, Hong Kong's big, Singapore's big. So although a lot of the forums are dominated, because yes, it is, I think 60+% US, there actually is, London's big. Interesting. Singapore's up there, Chicago, Toronto, LA, Boston, Houston. So you can see there are some international cities that actually do have a good amount of traffic on the site. Sydney's up there in the top 20. Let's see what else we got here. Philly, San Fran, Dallas, Washington, Paris, Atlanta, Charlotte, Austin, Melbourne, Mumbai, Montreal, Jersey City, Seoul, Korea, Seattle, San Diego, Dubai, Denver, Calgary, Nashville. That rounds out the top 30 cities. So yeah, it is North American centric. One of the things we did, I think last year, was allowed users to actually, and if you're on YouTube, you can see, YouTube Live, you can see this. I'm doing my screen. We allow users to actually filter now by region. Not a lot of people take advantage of this, but the forum is smart enough. We spent a lot of time doing this, but the forum is smart enough now that if you only want to read discussions about, let's say you're in London and you're only interested in the UK, you can filter all the discussions based on UK specific discussion topics. And if somebody mentions London or UK, it automatically tags it. Why are no cities in Latin America? There are cities in Latin America that do rank. Sao Paulo, we have Mexico City up there, but it's just unfortunately not the biggest in our forums. Maybe you can start. Help us get bigger in Latin America, please. What else we got here? Let me open up the YouTube chat again. Okay, Sanat asks, what are your thoughts on starting as an associate at a small boutique shop or an analyst at a top 30 bank? P.S. I'll graduate with my MBA in a couple weeks. Congrats, Sanat, on the graduation. Sanat, I'd go to whatever, whether it's a small boutique or an analyst at a top 30 bank, I'd go to whatever bank you can get the most deal experience, period. I think title is less important. Whether you're a senior analyst at a bank that's doing, I would go to become a senior analyst at a bank that has a lot more deal flow and gets you a lot more reps. Versus being an associate at a place where you're only doing one deal or two deals a year. So I think it's important wherever you're going to make sure they have strong deal flow. That's the best advice I can give you. So Alpha Cap Fund's going to help me grow in Latin America. Thank you. Thanks, guys. Here we go. Good question here. MT Nom Nom says, how do you think about resilience in the context of preparing really hard for private equity interviews and not getting anything? E.g., not making it past the case studies or senior rounds it's so hard to stay motivated. Are you talking about an undergrad? I mean, I think it depends. You know, I've done podcasts with people that specifically took them 2 or 3 years. I've had people who went to investment banking post MBA, which is usually considered like the last place you want to go to get into private equity, but they were so determined that they were they continued networking. You know, it's like beating a dead horse here, guys. Like so much in terms of like me saying network, and I think that's easy to say. It's much harder to actually do and consistently do it day to day. But that's really what's going to give you the best chance. You need to be knowledgeable. You need to have some EQ and understand, when to reach out and when to follow up, so that you're not coming across as like overly pushy, stuff like that, and you're actually able to kind of communicate that you understand how the industry works and you actually have some deal experience, so that you can say, hey, well, look at this experience is all relevant. You know, I've done deals in XYZ industry, and I know you guys have recently done these specific deals. I'd love a chance to chat with more of the people at XYZ Fund. Even with that, with private equity, there's so few seats and there's so many people kind of gunning for it. It doesn't mean if you're the perfect networker that, you know, with a 3.0 from a non-target school, you're going to be able to suddenly break into private equity because you're talking to a lot of people. Like, again, we need to be realistic too. It's very competitive, and even kids at the top banks struggle to get in. So I think it's one of those things where, you know, I can say networking, because that's basically the best shot anyone has is if they're able to develop relationships. But it's still not something that's like automatic if you just put in the work. It's still possible to just strike out and not get there. And I think MT, you know, how do you stay motivated if you're not making it past the case studies? You know, it's just a question of really how much you want it. I think private equity has been put up on such a pedestal over the last several years that people realize like there's other jobs out there that are very interesting and good work. I just did an interview with somebody yesterday who's was a strategy consultant with Accenture, and ended up at a private equity fund as a portfolio analyst. And he loves his job because he's going in and actually like working with the portfolio companies, working with the management teams to help like drive change and drive value, rather than just doing a transaction, running diligence processes and stuff like that. So there's different ways to go about it. You don't have to be in an investing role in private equity to be successful and be happy. So I think it's important that if you do really want it, you shouldn't give up just because you've been rejected a bunch of times. I also think it's super hard if you're working 80 plus hours a week and trying to run a private equity recruiting process. Sometimes taking a step back and taking another job where you're working 40, 50 hours allows you to prepare that much more and talk and network that much more in the space, such that sometimes that's when your break comes. So that's all I'd say is, keep your head up, realize that it's not, private equity isn't going to make you happy. Private equity isn't going to like solve all your problems. And sometimes private equity is just like banking 2.0. It's people who are in banking think that it's going to solve their problems if they just get into banking, and they get there and then they're miserable. I mean, I don't know if you guys saw the survey that came out that we ran. There's almost 500 people filled out the survey, and you saw the mental health. People went from like 8.2 on a scale of 1 to 10 for mental health down to like 4 or 3.8, something pretty scary. Just make sure these jobs aren't like, you don't have to find yourself up with these jobs, because too many people get into this group think of like, I have to go investment banking, private equity, blah, blah, blah. And so one of the things I do with the podcast is I'm trying to highlight other paths, so you can see you don't have to have that very linear path. There's other ways you can carve your own path. There's family offices where you don't have to just go private equity. What about family offices? Some of those jobs are amazing. You get paid well. You have more autonomy. You can do different types of deals, so you're not kind of siloed into this one type of deal. Anyways. Let's see here. Sushmeet asks, does chartered accountancy help in getting into investment banking? Sushmeet, I would say no. I'd say it doesn't necessarily hurt you, but I wouldn't say it's what investment banks are typically looking for. It's a nice kind of check the box. Okay, he knows accounting really well. But I think the time spent getting that the CPA, I assume is what you're referring to, is better spent probably networking and just practicing financial modeling and stuff like that. So I think it can help on the margin, especially if you're looking at like boutiques and that maybe don't want to train you as much. But it's one of those things where it's definitely not a requirement. And it's definitely not something that you should go out of your way to get if your goal is investment banking. Thanks. Summer Analyst 2022 says, watch Calvin's corporate development podcast. Pretty awesome. Yeah, there's a lot of, I would encourage people who are like so dead set on like private equity investment banking to go listen to some of the other podcasts of some of the successful podcast guests I've had with other roles, just to open your eyes a little bit, like investor relations, corporate development, corporate finance, even some family office ones are pretty cool. Let's see what else we got here. I have only about 5 more minutes. Sorry, I'm way behind on Instagram. Grass is greener, but it's always burning. That's funny. Thanks, MT. Thanks for the kind words. Good question from Chris Santa Cruz. How much better does work-life balance get 5 to 10 years in IB versus private equity buy side? So you're talking like 5 to 10 plus years in. So I think what's tough with banking is even at 10 years in, you definitely aren't working those 90, 100 hours a week, at least not typically. But I remember in investment banking, my managing director would be calling me at 4 a.m. to fix footnotes in a pitch deck. So like, it's really, I think at that point, it's really about like work ethic. And I mean, that guy got to where he was bringing in millions of dollars for Rothschild because he worked so hard and because he had that chip on his shoulder. He was kind of more the exception. I think the typical hours, once you get up to the MD level in banking, the problem is you're traveling a lot. So you're doing a lot more road shows, you're doing a lot more client meetings. you're less in the execution side of like building pitch decks and all that stuff. You're reviewing it kind of last second and kind of going to the meeting and delivering. And it's more about presentation skills. It's more about sales skills and relationship building. So guess what? Networking helps you for that for long term. So another plus for networking, another reason why all of you should be practicing that. I mean, I can't think of a skill that's more important for your career than that stuff. So in terms of work-life balance, so it does get better. So if, let's say you're, VP is pretty stressful because you're still kind of responsible a little bit for the execution, but now you're expected to actually go actually bring in business. So it's a transitioning from like an execution role to a sales role. Whereas like MD, it's pretty much purely director, or MD, it's pretty much purely sales at that point for most banks. And that can be a tough transition for people. So, it depends on if you like that. It can be, 50 hour weeks with some travel. It's up to, 60, but it's typically not an easy job where you're going to be like 35, 40 hours a week with your feet up. You still need to go sell. And like anybody knows in sales, it's about like how many pitches you make, how many, who you're getting in front of, all the more people you're talking to, the more chances you are to actually closing a deal. So it's still a hustle. Private equity, I would say at the senior levels, after 5 to 10 years, at least at a middle market fund, I think it's a little bit more cushy, but it still has its cycles. So when you're on a deal specifically and you're like in charge of it, or you're having an investment committee presentation, it can be stressful. And you could have a week where, let's say you're a principal at a middle market fund, you could still be doing a late night here and there, working 50, 60 hour weeks, just to stay on top of things, especially if you're a go-getter and trying to eventually make partner in the fund, just to impress the other partners and make sure you're getting that promotion. But I'd say on the margin, probably private equity is a little bit better work-life balance long term. But yeah, hopefully that answers it. Long-winded way to say. Let's see here. Solomon asks, corporate strategy analyst exit opportunities to private equity. I just did a podcast yesterday, coming out in June, with a guy who did corporate strategy more as a not internally at Portco, but at Big Four, and then transition to private equity. So you could theoretically go to like a McKinsey, Bain, BCG type place, and then transition to private equity, or try to get an investment banking and transition that way in the more traditional path. Let's see what else we got here. Jamie K asks, hi Patrick, what's your opinion on private equity funds investing into sports teams leagues at the moment? For instance, FSG buying stake in Liverpool FC. Hey Jamie, I don't know. All evaluations seem super high and crazy to me. But these brands are super valuable, but unfortunately I don't know enough about the deals to kind of comment and know whether I think it's a sustainable, I think a lot of with sports franchises, there are a lot of them are like trophy assets that people don't care about what they cost, and it's more about just owning them to say you're the owner of Liverpool. Specific funds investing in them, I don't know how good the returns are going to be. It'll be interesting to track over the next decade or so. Kieran says, bulge bracket or boutique? I think, Kieran, the right question should be what group at the bulge bracket and what group at the boutique. So try to get group specific. So don't look just at the whole firm. Try to understand that there's major differences between groups in terms of deal flow and everything. So you could be at a great firm in the worst group, and it could be a really bad experience for you. Let's see what else we got. I think I'll take a couple more. Summer Analyst 2022 Aspirin says, anatomy of a networking call, how to convince you're a misunderstood kid from a non-target with potential, and how to stay in touch with the network. Sure, let's end on this one because I think it's so critical. The anatomy of a networking call, let's pretend you've reached out to somebody, they've agreed to actually chat with you on the phone. I think the most important thing is to not have you can have set questions prepared, but not be so fixated on delivering those questions. Like you have to ask these questions to let the conversation naturally flow in the direction it wants to flow. So if the person you're networking is talking about this, you should be going with them. You shouldn't be suddenly be like, okay, I need to get to my second question. I need to go to my third question. You need to flow with them. You need to become a good conversationalist, and that's why doing so many of these calls is so critical. I think there's a dangerous thing that the summer analyst here is asking on YouTube. He says, how to convince your misunderstood kid. So just even reading those things, you already are coming into this call as if you're like inferior. You're coming to this call saying, I'm misunderstood. It's like you're trying to convince them of something, that you're a non-target, you have potential. First off, have more confidence than that. The way you demonstrate that is not by convincing them, it's by showing them based on the questions you're asking and how knowledgeable you seem in what you're specifically asking. So that's key. How you convince them is not by telling them, it's by showing them. And you show them with the specific questions you ask, how well you flow with them in terms of taking their lead. So if somebody's talking about a specific deal they did, you can ask follow-up questions on that. It shouldn't be off of a list of standard questions that you think are good. Now, sure, if you've done your research on the firm and on that specific person, you have specific questions about them and there's a lull or whatever, that's a great thing to go back to so that you can keep the conversation going. But the best networking calls, the best conversations are ones where it flows naturally and you're completely off topic. You're talking about sports, you're talking about theater, you're talking about dance, art, anything. I don't care. Golf, whatever, squash, doesn't matter. Anything that takes the person's mind away necessarily from their job. They don't necessarily want to be talking about their job all the time. And so this call with you is kind of like a break for them. So if you can get across that you're a sharp kid just through the questions you ask and through just kind of having a short and sweet pitch about yourself and what you're looking for, and have genuine interest in what they have to say and about the industry, that tends to show more than someone who's coming into it like a robot and just saying, I'm going to network because that's what I've been told to do. Here are my 7 questions. Number 1, what do you think is the future of your firm? Number 2, that's a disaster. That's a disaster, and no one is going to want to talk to you. No one's going to pass you on. And if you're coming from a non-target, that you're misunderstood, my guess is that's a misunderstood kid from a non-target. Misunderstood, does that mean low GPA? So it's going to be hard to overcome that. So you need to build real relationships, and you do that by staying in touch with them. How do you stay in touch with them? Well, what did you talk about? I hope you took good notes about what you talked about. Now, can you find something relevant in the news 6 weeks later, 3 months later, to ping them again, let them know that what you're up to? Are you showing them that the advice that they gave you, are you following up and showing them that you actually listened to the advice they gave you and you actually followed through on it? This is what makes a difference. This is what somebody who's doing this month after month after month, year after year, are the ones that get the opportunities long term. And it's as simple as that. I think we'll end it there, everybody. Thanks for joining WSO Office Hours. I got to run to the airport. I have somebody to pick up. Talk soon.